Hello, this is Dylan Lange, branch manager and home loan officer here at Evergreen Home Loans in Bellingham, Washington. Going through the November market recap. So if you're getting this video, either you're on my newsletter, email distribution, you've seen it on social media, some various channels, you're either a past client, a referral partner, business partner of some capacity. And so, I do these monthly. Feel free to go back and check out recent months videos. If you go to WhatcomHomeLoans.com, it's the best resource for everything. It's my YouTube channel, which is at Whatcom Home Loans. But if you go to WhatcomHomeLoans.com, you can look here at the resources tab and you can go to mortgage updates. Those are the monthly mortgage updates. You can also look at the new loan limits. So new loan limits were just released for every county, but specifically Whatcom County, you can see these are the 2024 conventional loan limits. You can see here they've jumped up $30,000, $40,000. So the single unit is $806,500. That's a loan amount, not a purchase price. And you've got the 2-unit, 3-unit, and 4-unit, as well as FHA loan limits that went up about $30,000 as well. Anything over that borrowed amount would be a jumbo loan. It's just stricter guidelines, lower debt to income ratios, things like that. And that's going to be the topic for today is different loan programs. If you're somebody that's maybe been waiting and just watching the market from afar, maybe you currently have a house, you're going to be a first-time home buyer, and you're just kind of seeing how things are playing out with the presidential election, what the Fed's going to do. I want to talk through some loan programs that can help you purchase a home in 2025. And I know sometimes people glaze over when they hear about a loan officer talking through loan products. But trust me, there are some really, really innovative products that I have not seen at other companies. I've been doing this almost 10 years now, and I think Evergreen is top notch in their product offerings. So this is my website. As most of you know that have been following this along, I have to show my NMLS number, for compliance people if you're out there watching. But this is where you can find anything and everything on past videos, loan programs that we're going to talk through. So that will be on this tab, which I'm going to show you the PDF. And then just different various resources. You can also apply for a mortgage. You can get an interest rate. You can look at 5-star reviews, all that good stuff. So let's dive into it. So as I stated, the quick nugget this month, I just thought would be good to kind of end the year on, let's look at how you can buy a home in 2025. And historically, the data states that about 30% of home sales are cash. So if you're in that boat, you won't need to know about loan products. But if you're in the 70%, the majority, you need to know about loan products and how to, how we look at your credit, your income, your assets, your different financial situations, and get you in the best loan program to, one, get you the house, but 2, get you a comfortable mortgage payment that makes sense for you. I know that a big thing that's really been pushing buyers out and having them wait are mortgage rates, right? It seems too expensive. Home prices haven't really come down. Whatcom County is a very desirable place to live. We've got a lot of influx of people coming from different states. So let's talk through some of these loan programs that can maybe help. Before I do that, right, I just mentioned mortgage rates. A lot of buyers are waiting, saying, I'm going to wait for mortgage rates to come down. Well, let me show you this. So this is from Keeping Current Matters. These are the mortgage rate projections on a 30-year fixed rate for next year. And this is by quarter. This is Fannie Mae, MBA, Mortgage Bankers Association, Wells Fargo, and then the average of all 3. These are 3 pretty reputable sources. And so right now, you're looking at a 30-year fixed of probably mid to high 6s. These are the average of all 3, all the way till 2025 quarter 4. Is low 6s. So you're maybe talking a 0.5% decrease from where we are currently at this time next year. So if you think that mortgage rates are going to go down to 3%, or if you're running numbers at mortgage rates at 3% to be able to buy your home, it's probably not going to happen. Once again, there's a lot of economic forces that can shift this one way or another. But these are pretty reputable sources. And these reputable sources, though, have been wrong in the past. So it could go up, it could go down, it could go sideways. But I thought that I would just show that page really quickly. So let's go through the loan programs. This is the new loan program catalog that I built. And maybe some of you guys are thinking, are you really that slow? You had time to redesign this? This business is seasonal. I said this in a few videos ago. I think it's a great time for buyers. When it is wintertime, there are less buyers out in the market, which means less demand, which means you can get a better price and a better deal. I know a lot of listing agents that I talk to, a lot of sellers, their homes are sitting on the market. And what that means is a lot of them need to sell, and there's some desperation creeping in there. So as a buyer, I think you can really get a good deal in this market. I bought a lot of property during the winter months for that exact reason. So really our inspiration is, not all financial situations are created equal. And that's why we really take pride in our product offerings. I feel like we have a solution for most everybody to be able to get them into a home. And there's 4 different segments. The first one is our innovative solutions. These are solutions that I just don't really see at other mortgage companies. We have a cash up product, which is where you can make a full cash offer on a property. We actually buy the home cash, and then you buy it back from Evergreen. Fastest Cash is a different way of doing the cash product. It's a 10-day close, no appraisal, no financing contingency. Security Plus backs any pre-underwritten buyer with $5,000 of our money. So that looks really, really good to a seller because we give you protection of $5,000. And sellers are afraid of financing falling apart or an inspection blowing up the deal. And if we give them that certainty that, hey, my clients are rock solid, and if something happens to financing, we'll pay you $5,000, they like that. Step Up is our bridge loan product. So if you need to buy before you sell, it's a 4-month bridge loan product. What's unique about it is we do not hit you for your departing residence debt if you have a mortgage on it. We just qualify you on the new payment as if you were to sell your property. And then temporary buy down, we're doing a lot of these where you can use some of these seller credits to do temporary buy downs, get a 1, 2, or 3% lower rate for 1 to 3 years to help you kind of step into that payment. Okay, the regulars, we've got all the regular stuff, the conventional, the FHA, the VA, the USDA, HELOC products, jumbo, we've got down payment assistance, we've got fixed rate mortgages, ARMs, and we've got construction, rehab, all of that stuff. I would say about 75% of our business is conventional loans, which is why I showed those new loan limits, because we do a lot of them. Brokered, these are some unique ones. If you are maybe somebody that's been denied for a mortgage or thinks you can't qualify, these may work for you. A bank statement loan. So this is where self-employed borrowers who use personal or business bank statements, we can actually use your deposits in your bank account for the last 12 to 24 months and create a cash flow and income based out of that. If you're a business owner that maybe has high revenue but high expenses on your taxes, your net income is not enough to qualify, we can actually use your bank statements for that. DSCR, if you're buying an investment property, we can use the cash flow on the property and we don't consider any of your income. You could literally not be working and do a DSCR loan and buy an investment property. Asset depletion, if you're somebody that has maybe large liquid assets, it could be in IRA accounts, mutual funds, savings accounts, checking accounts. There's a calculation we can use and create income based on those. As well as if you're retirement age and you have an IRA, there's a way that we can create distributions out of your IRA to create income, and then you can turn that off after closing. 1099 employees, we can take your 1099 and do a cost percentage, essentially. Once again, if you write off a bunch of stuff on your taxes, we can look at your 1099 and we can use that revenue, and then we take a little expense ratio, use that as income, and then reverse mortgages as well. And then partnership lending, this is something that has been a big push because we're just really trying to partner with sellers to help move the needle. And also we try to partner with employers and different builders to create an affordable mortgage solution. So Home Seller Advantage is where we offer a discount. So I've got 4 of these currently, and the addresses are, I can just actually show, this is my email that I'm sending out. 2921 Pacific Street. The seller's offering $8,000, and we will offer 0.75% of any borrowed loan amount. So if you borrow $600,000, we would offer a $4,500 lender credit. So that'd be $12,500 off of closing costs for this one. 2113 Lagerway, that's $15,000 seller credit and our same 0.75. 2115 Lagerway is $3,000 seller credit, and 3901 Cabrant Road is a $10,000 seller credit. So that's been a really, really popular one. And another just example of some of these listings sitting, and I think buyers have a really, really good opportunity right now. Employer Affinity, we partner with employers, offer a discount to their employees if they get a mortgage with Evergreen, and then any builders. So contact us with any questions about any of those. Those are just some of our products that we have at our disposal. If any of those seem like they may fit for you, a client, a family member, a coworker, please do not hesitate to reach out. So let's go back to the newsletter. So as we always talk about rates, turn times. So mortgage rates are, they're trending downwards, but this is not, this, I always show this Freddie Mac website. This is the average 30-year mortgage in the United States. You can go to this website. It's about 6.6% on a 30-year fixed. You can see it's gone down since November 21st. It started heading downward, but when it basically after the Fed cut the rates the first time, this was before the presidential election, mortgage rates shot up, which created a big standstill in the market. And I always like to look at mortgage applications because this is 70% of the buyer pool, right? Mortgage applications went down when you had this mortgage rate increase of about 1%. Mortgage rates or mortgage applications are back up because you have this little dip, right? These really run hand in hand. The lower mortgage rates go, the higher the mortgage applications, which means more buyers jumping in the market, more competition. So as a seller, that's good news. As a buyer, that's bad news. The more that mortgage rates go up, right, less buyers, less mortgage applications. That's not good for sellers. It's potentially good for buyers. And when mortgage rates go down, right, the inverse is true. So I don't know if I created a tongue twister there. But that's what mortgage rates are looking like. I always show, the rates, the APR, the principal and interest. That's for a $700,000 purchase with 10% down. You've got a little thing here. But yes, mortgage rates are trending down. Mortgage applications are trending upwards. Internal turn times, we're able to close a loan really, really quickly, 2 to 3 weeks. And I think that's the gist of it. So this is the bond market, though. This is really the nitty gritty. This is when bond yields go down, mortgage rates go up. When bond yields go up, mortgage rates go down. They kind of work in inverse. You can see, though, over the last 2 days, the bond market's been going down, which means mortgage rates are heading back up. So once again, back to my earlier point, higher mortgage rates go, the less buyers that are in the market, and the inverse is true. So if you or anybody you know is looking to jump in the market in 2025, have questions about loan products or how to qualify, want to look at your credit, income, assets, the best thing about applying for a mortgage is it's free. We can look at everything. We can do a soft pull on your credit so it doesn't ding your credit. We can look at all of the different pieces of your credit, income, and assets, your debt, let you know what your max purchase price would be, and also what best loan product would fit kind of your financial situation. So anyway, hope that you have a great holiday, and I will see you next month for the next newsletter. See ya.